Hey everyone, hopefully you're having a okay day. Not necessarily good. This Black Friday special is definitely serving us up a special day today. So I was reading through the comment section, got it up right here. It says, I can't open my accounts today, neither can I. Andy, where are you? We need you to calm us down. Sorry, Andy, we're not having a good day. Someone says Black Friday. Yeah, I agree, this is a Black Friday. But there are some things that I want to bring out to your attention. We've got the Dixie going down 0.77%. We've got the 10-year yield. It is going lower. I'm just going to zoom in here. You can see this. What we had, it's down quite a bit. It's down 9%. And what we had was a reverse head and shoulders pattern on the 10-year yield. Let me get myself out of here. This is the reverse head and shoulders. What does this mean? It means that the rates are going to rocket higher. And if you look at oil, I'm going to go down to oil. Yeah, oil is getting crushed. They are selling it like heck. Going to the 6 month, look at it. It's coming down. We're at $69. And a lot of our companies are getting hit pretty large. 15% down day for SM, CDEV, CPE. Some of them down 20% almost, 19%. But we're heading down here, getting hit pretty hard. That's on the right-hand side here. You can see these big sell-off here. Now, if you zoom out, we are coming back into this pattern here. And I don't know how long that's going to be, but this is the big old pattern that's about to break. Now, these guys printed a bunch of money. They printed copious amounts of it. And they can't raise rates, right? They can't raise rates to stop the inflation. So what do they have to resort to? They're going to have to resort to fear. They're going to have to resort to get this thing back into its channel. They can't let this go. They're going to try to hold, suppress. They're going to do whatever they possibly can to hold the price of oil down, to hold the price of the 10-year yield down, because we can't have rates at 2 or 3%. They're going to have to spin narratives. They're going to have to tell you, hey, look, this is transitory. Hey, look, we've got COVID out there. We've got a new variant. We need to shut things down. We need to do this. They need to job on it and get these things to suppress down. So that is my opinion, is that they're trying to contain everything they can, suppress the prices as low as they can for as long as they can, with job-owning narrative and with whatever tactics they can have. And they knew that this day was coming. You could even say it was a plan, but we'll call it the plandemic. People have talked about it before. They had problems before. They needed to create a bunch of money, but they needed a way to slow the economy down. They need to slow that money velocity down. So what else better way to do it? Well, we could create something where we could do lockdowns and shutdowns and all sorts of stuff. So that's exactly what's happening. They are trying to control this through fear, I think. And that's what we're seeing on the charts. They know that we're at critical levels and that we're at a breakout for oil, that we're at a reverse head and shoulders for the 10-year yield. They know this. They've got chart readers just like everyone else does. They got the guys going to work for the government that can read charts, and here they are. I mean, this is a reverse head and shoulders ready to break, and here they are pumping it lower. And that's my opinion. We've got gold here. Gold's ready to launch as well. What did they do? Sell this thing off. Control, control, control. What is the likelihood that all of these things in commodity sector are rocketing higher, and that the only ones that aren't partaking in this rocketing higher are gold, silver, and platinum, the precious metals group? What are the chances of that happening? I'd say probably pretty slim. So I think they are in there. I think they are trying to do things, but I don't think they'll be successful. This is what this is what it looks like when you're trying to control things, and they're doing last-ditch efforts. Oil was getting out of hand. Biden, let's say, hey, let's start with something a little bit easy. Let's throw out, this is behind doors. Let's throw out a 50 million barrel out of the reserves. Let's see what that does. Didn't do anything. So now they're like, we need to go to more extreme measures. we need to start doing variants and stuff. So they're going to start throwing out all these other narratives, and they're going to try to control and suppress. So my thing is, and if we go down and let's look at the, well, what's even weird is we've got this. I don't know if this is delayed or not, but commodities are still up. I don't know about that reading, but that's the commodity market here. We're breaking to the upside again, to the upside here. Maybe that will go down a bit today, but everything was intact. All the charts look good. They're reading the same stuff that we're reading, and they're getting scared. They're spinning narratives. Here's the CRB index to the S&P 500. The CRB index is probably getting hit. But again, everything is still intact. Nothing is broken yet. In terms of the CRB to S&P 500 ratio. And of course, I'm talking about it and you guys can't see it, but there's the ratio. Nothing's broken yet. We're still all good. The platinum to palladium ratio is getting a huge boost today. Platinum outperforming palladium, palladium selling off more than platinum. The ratio is breaking to the upside. So platinum's actually looking very stellar in relationship to palladium. We're still looking okay from the platinum to silver ratio. Gold to silver ratio is rising some. We've got the platinum to gold ratio. It's still above its target here. Everything looks okay. Now the gold to oil ratio is coming up quite substantially. They're hitting oil. They're targeting oil. They're trying to hit that and get that inflation rate. Remember, everything is focused on oil. That is your feedstock. That's your input costs to all these companies. So if they can hit oil and try to get that down, it can lower inflation. But I think they're all trying to control. They're trying to spin the fear. The bull market is intact. It is still going to come. That money's been printed. The inflation is coming in a tsunami. They know that. They need to push this stuff down as much as they can before this tsunami comes. At least that's kind of my take on it. So that's we're getting hit. I'm not logging into my account, that's for sure. I'm not going to take a look at it. I like how I'm positioned. I like the areas that I'm in terms of the energy sectors and whatnot. Obviously not today. Getting hit pretty hard. And I'm just kind of looking at the right-hand side here and what else I can really comment in, but they got to hold rates down. They got to hold oil down. And that's what they're going to target. And that's exactly what they're hitting. So they're probably going to come out with more of this stuff. And if you see more narrative-driven things, more fear tactics, more fear being pushed out on you, look for it. Be ready for it. This is going to be a war. It's going to be the war of the money that they created versus the narrative and fear that they're going to have to push to try to control and suppress these prices. That's all they have left. They're backed into a corner. They're not going to raise, they don't want to raise rates. And they're probably going to have to let rates go up anyway at some point because they printed all this money. And if they're going to devalue the debt, they're backed into a corner. Usually rates rise during those time frames. And right now, they're pushing the fear. So I'm not doing anything with my portfolio. Hopefully this gets to you all right, and hopefully you guys aren't too scared. I'm here riding along right with you. I'm feeling the same emotional response as everyone else. I've just seen it before, and I kind of look at it and say, well, this isn't going to bring on more oil. This isn't going to change anything. This narrative and this fear that they're driving, it's not going to change anything. So I'm going to hold tight and let it ride. All the valuation metrics are good. The market conditions haven't changed. We still have a real estate boom in front of us, which is going to be inflationary. Everything's still intact. Hopefully you guys can hold on. Be strong, guys. Give me a thumbs up for the content. Put in the comment section what you guys need. I'll keep producing videos if you need them. And thank you for listening. This is Finding Value.